Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing afternoon. And at this point, I just wanted to cover Bitcoin once more because I got a lot of requests for a one-day candlestick close instead of halfway through. So that's the reason for this extra video here today. Also, kind of just bringing some things to your attention to make sure you understand, big picture, best practice in this type of situation. So that being said, not a financial advisor. I hope you can learn something here today. I love teaching people how to trade. So down below there is a link in the description for CryptoCache.tech as my website in case you want to become a better trader. The Trading Academy, community, and signal group where I share signals for every single trade that I take. And I teach you every step of the way, things that I do that keep me successful year after year. This is my full-time job. So I can tell you it's pretty consistent in a lot of ways, but lately there's been less consistency. I totally can acknowledge that. I mean, my community at this point is questioning what's going to happen with the market. And honestly, some people don't really know. In fact, I think everyone doesn't know. And in truth, in theory here, all we can really do is take the data and use it. Okay, and that's what we're going to do. So taking a look at the one-day chart, we're kind of work our way down. In fact, why don't we start with the weekly? Let's just go ahead and go out here a little bit further. And one thing I kind of wanted to bring to your attention here is, just some potential patterns here. And again, it's not like foolproof or guaranteed, but in most cases, what we'll do is we've seen a couple of weeks where the price comes up, and then we see 3 red days afterwards, right? 2 green, 3 red. Granted, we had a red week last week, of course, and it did close red, but generally speaking, with the strength in today's volume and push back to the upside, this very well could be a pretty decent extra candlestick. It could be a very large green candle for the weekly. Again, no guarantees. Just because we have one good day doesn't mean the market is back on track. We've got a lot of ground to cover, but just highlighting that simple fact is the bottom line is that we usually see three red weeks followed by a green week. We had a red week last week, so I think green is inevitable at this point. Outside looking in, big picture, just kind of theoretically, that's what we're looking at. But looking at the weekly here, keep in mind we are under 50 on the RSI, so obviously, once again, we can get back up above 42,000 for a weekly close. Then we'd be in pretty good shape to probably see the RSI up over 50. For now, we're still underneath that, and that's something we need to acknowledge. And we also need to confirm the fact that we've got kind of a squeeze here, so to speak, for the MACD, basically just telling us that there's no control for the bulls or the bears this time. Okay, state of indecision. I think we all can attest that with what's been happening here in the last couple of days. So generally speaking, that's where we're at in the weekly. We can even jump out to the monthly here too and just kind of acknowledge the simple fact that we do have a MACD divergence, right? This is quite a stark reality in the fact that we could be just getting started to the downside. All right, so keep that in mind. Again, just shadow of a doubt or kind of in the back of your mind, so to speak, that there is an overall momentum shift in the monthly category. But once again, you got to understand that the MACD is not the only indicator you should base your decisions on. Okay, so just some friendly advice there. In general, MACD helps in general, but it doesn't and isn't the reason for just making a decision. You want to do a lot of other things and factor those in. And that's why I love TEA, because it really helps you understand, kind of come to your own conclusion on what you feel is going to go whichever way. It doesn't always work. Of course it's not. It's not a foolproof plan, but it does increase the odds of your success if you look at everything and extract what you can from different time frames. So on the monthly here, we can see we have a MACD divergence, but we still haven't broken below 50 on the RSI. That to me is a positive because we're not considered to be a significant bearish downtrend. If we break under 50 on the monthly, I'm going to probably be a little bit more concerned at that point. But overall, Bitcoin has shown strength since the get-go, and we've never seen an RSI under 50 yet. Okay, so I think that's a very positive thing here. That tells us that we could and very well should see higher highs and higher lows in general from Bitcoin on the monthly. Okay, but there's no doubt, and very much true that this red candle is not positive in the grand scheme of an overall uptrend. Obviously, that was stunted out, but it's not to say that we can't still have that. Okay, so just something to throw out there. All right, so looking at the one day, let's go ahead and go to the standard stuff here so you understand. And taking a look here, first of all, we got the one day candlestick close above the key level Fibonacci retracement, which is essentially 40,340. So just say round number 40,300 was essentially a point in which we wanted to close above, and we did. Now, what does that mean for us? Well, it doesn't necessarily mean that we're in the clear and it's just going to keep going up. But it does tell us that it was a very strong day, because when I last covered Bitcoin this morning, we were trending in upper 38,000 territory. And I had mentioned that we need to see a close above 39,200 at the very least to start making higher highs and higher lows on the 1 and or 4 hour time frame. We'll look at that here in just a moment, but in general, that was the thing that I felt would have been very important. But we went an extra leg up there, so to speak, and we closed above 40,300, which is extremely important in the grand scheme of things. Now, does that mean that we're on track? No, we're still under 50 on the RSI. That doesn't change. That's kind of a stark reality there. But it does give us more momentum here to potentially have a convergence on the daily, which might be a positive thing. Okay. Well, I wouldn't say might. It's definitely a positive thing. But generally speaking, again, it's another added benefit or bonus. It's not the reason to take a trade. That being said, though, the 1 day time frame is looking very good. Today was an extremely good candle. And if we were to look at what's happened previously when we have such a large wick down followed by a green close, that shows strength. We have it's been considered to be a bullish engulfing candle, and that essentially allows for the second day to increase. So the likelihood of tomorrow being a green day is higher, based on the simple fact that we have a bullish engulfing candle. Even though yesterday wasn't a bearish candle, it was still a doji showing indecision in that 24-hour period. Indecision followed by a strong, firm decision tells us the likelihood of continuing higher is greater. All right. Again, just something to think about there. Take a look at the 4 hour. Here's another positive here as well. We're finally back up above a moving average right now. I know it seems like a stretch to be excited about this, and it really isn't something to be super stoked about, because we still got other key resistances based on the moving averages. But to me, being back up over the 50, again, tentatively, this next candlestick, we want a few more candlesticks to close. But the bottom line is that it's a good step in the right direction, because we're above 50 in the RSI. All right, so as soon as we broke 50 on the SMA, we likely or came very close to breaking 50 on the RSI. They usually work close, hand in hand. In this case, obviously, RSI is a little bit higher, but in general, those are really positive things you want to acknowledge. Other than that, we've got a MACD convergence on the 4 hour, which to me typically implies that you want to take a swing signal. At least it's one of the major timeframes that I like to pay attention to the most for swing trading is the 4 hour MACD convergence, telling you that the shift in momentum from bearish to bullish has occurred. And as you can see, it's happened for a very long time. We've had 4 days of downtrend, and now we're finally having a green day. Okay, so it's nice to see this for a change. But generally speaking, again, not the reason to make a decision or to take a trade, but this is very positive. 50 on the RSI, 50 on the SMA, as well as a MACD convergence. So it's basically 3 check marks across the board on the 4 hour. That tells us that we're going to start seeing some good 1 day candles, likely based on the fact that we're having a continuation pattern on the 4 hour so far. Again, kind of early, but generally speaking, if you look here at TD sequential, we're only at like a 3. And when I'd mentioned earlier today, we were hitting a 5 and a 6. And I was trying to prepare you to the fact that we could have seen another 9, but 2 9s in a row on a 4 hour is less common, and I'm glad that we only saw a 6 and then a reset. So what I'm getting at here is that we're in really good shape, for lack of better terms, on the 4 hour, and that'll transition to a much better daily chart. Taking a look at the 1 hour though here, we can see a little bit of overextension. In fact, kind of a lot of it overextension. And what that's doing is basically just telling us here that we're past a 9, we're into overtime, but it's still healthy in the sense that it's continuing sideways and it's not going up super hard right now. So what would be excellent is over the next 24 hours, just say the overnight, so to speak, when the market is closed, to possibly see the price come down a little bit, but no lower than 39,200. Okay, so I wouldn't stress if the price comes back down in the 30s. Obviously, we don't want that. That would be nice to not have that. But for lack of better terms here, as long as we bounce off of this level here, we'll still be making higher lows. And that's the important thing to acknowledge. When we can touch on the fact that we're making higher lows now, and we haven't been doing that in almost a week, is an extremely important shift in momentum. It doesn't necessarily mean we're going to continue to move higher, even though other time frames are telling us that. But what it does tell us is that we're more likely to continue the price action, at the very least, continue sideways and not get rammed just somewhere below 39 or just to shoot right past 42. I think we're probably still going to be stuck between 39 and 42 for a little while. That's a possibility. because once again, 42 is a strong resistance level and we need to respect that. And that's this level right up here. And I can tell you that we are likely, if we just say we were to break above that, there is a potential we're going to see some resistance there. We might, and what could possibly happen, I see this happen a lot, is you come up to test that resistance that was there before, and of course you complete the handle. So we could very well see a cup and handle pattern continue to form, but once again at this point, no use reaching for straws. We can acknowledge the fact that we're overextended right now. A pullback would be necessary, or beneficial in a small way, if that makes any sense, because if we keep going up, we're going to have to come down harder. Okay, so again, as long as we don't hit a second 9 on TD sequential, we shouldn't expect a strong pullback. So my hope is that we get a sideways action here, get a reset, come back up to 8 or 9 perhaps, but as long as we have enough consolidation between, we're in good shape. It's these extra overtime when the price just continues to go is when we start to see some problems. All right. Anyways, looking good there, and I'm willing to speculate once again with the MACD converging on the 4 hour that we are above the cloud on the Ichimoku, which is very, very accurate. And speaking of which, the trade that I took earlier today with the avalanche trade, with my community, of course, speaking to you more so directly, was because we broke above the cloud. We had the 4 hour MACD convergence. That was a very important factor to me to be able to take that signal. Again, no guarantees it's going to hit. In fact, the stop loss was very loose, if you catch my drift. But generally speaking here, Bitcoin is exuding very positive highlights on the 1 hour and the 4 hour. And the daily, even though it looks still unfortunate and I wouldn't say abysmal, but not fantastic, could likely continue higher. I love the look of this candlestick. These are one of my favorite candlesticks because they typically always increase in price when you have a close that's that much higher than the lowest candle wick. Pretty much just means the bulls dominated today. And what it usually implies too is that we're going to see a continuation. I would speculate we probably see another 2 or 3 days worth of bullish convergence until it fizzles out potentially at 42,000, or we break above and close soundly above that. Until that happens, obviously a lot can occur, but between now and then, as long as our next low isn't lower than 39,000, just say 300 is a round number, I think we're going to be in pretty good shape here to see this continuation upwards. So that's all I have here for today. I hope you found benefit. Obviously, like, subscribe, and all that good stuff if you'd like. But more importantly, check out my community. CryptoCache.tech is a website where you can essentially register to become a better trader. So it's a really cool opportunity. I have a lot of folks that are benefiting from that. So take a look at that in your own time. And I do look forward to getting to know you better. Hope you have a great rest of your day. Thanks again. See ya.